And in the end, what we're all waiting for is this little puppy, the banana zone. The banana zone has started, and we barely started. And you freaking out, this stupid, oh my God, it's going to correct 20%. Look at Raoul's chart of liquidity. So if we get a bit of a correction here, does it make any difference? Or you're better off just going outside, touching grass, spending time with your family over Christmas, drinking a little too much Bollinger Rosé. In the end, we're here for one thing and one thing only. I'm trying to help you understand that you can fuck your future with a banana. All you have to do is not fuck this up.
The cryptocurrency market has experienced a turbulent few days. Bitcoin, the world's largest cryptocurrency by market cap, suffered a sharp correction on Thursday and Friday, dropping by around 13.3% in just 48 hours. This price dip was largely driven by the Federal Reserve's hawkish 0.25% rate cut announcement on Wednesday, which caused Bitcoin to fall from its all-time high of $18,340 to around $17,180 by Saturday. Other altcoins like Ethereum, XRP, and Solana also took a hit, with Ethereum dropping 18.8%, XRP falling by 21%, and Solana seeing a 20% decline. The futures market also saw $1.4 billion worth of liquidations, according to CoinGlass data. Despite the market downturn, Real Vision founder Raoul urged investors to ignore the immediate crash and focus on long-term issues that will have a more significant impact on crypto prices and the bull market of 2025. One such issue is the brewing debt ceiling battle, which Powell believes will lead to further market volatility and send crypto prices soaring in the coming month. He suggests that this will likely trigger liquidity changes, including a drawdown in the Treasury General Account and the end of quantitative tightening, creating a positive liquidity story for Q1 2025. Powell is confident that central banks, including the U.S. Federal Reserve and the People's Bank of China, are poised to implement massive money printing and other quantitative easing measures to stimulate their economies. This will likely lead to significant price increases for financial assets, with cryptocurrencies set to benefit the most. Cryptos have consistently outperformed traditional assets like stocks in relation to the Fed's balance sheet over the past decade, and Powell predicts this trend will continue.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
We know the Chinese have to start stimulating, but they can't do it with the dollar so strong because they don't want to weaken their currency too much. So they need the US in the game. Everybody knows the game. They all understand the game. It's just a matter of timing. So be patient. We've got the liquidity of the Treasury General Account coming and the reverse repo and the end of QT. That's all coming. We've got potentially and hopefully a weaker dollar. That's to come. We should see rates come lower because expectations now for only 2 rate rises, rate cuts all of next year. Well, anything that produces weaker data will produce more rate cuts. So we've got a perfect storm coming up, and that's the banana zone thesis. Is this the start of the big correction, or is this a quick shakeout so you people can't hold on to your coins into year end when we get a rally? I mean, the last 2 election cycles, we finished the end of the year with a big rally. I don't see why this is different. So I'd be careful, not of the market correction. We should expect that. Part of don't f this up is expect 30% corrections frequently. But please don't think about, well, I need to hedge this, close my tokens, buy them lower, blah, 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 blah. You should be prepared to accept the volatility because that's what gives you the gains. If not, you might well be chasing it into year end. By the time you chase it all get long, into, let's say, January 6th, then the market reverses. Just don't get involved in that. Your job is to hold, to own your tokens, don't trade, don't use leverage, just do nothing. Business cycle about to improve. That's fully fed. ISM versus fully fed tells you the business cycle is about to pick up massively. It won't be inflationary, but we should start to see the business cycle pick up. That's going to be good for all of us. It means we're going to make a bit more money in our businesses. We're going to start to feel a little bit more at ease. We'll be able to invest more money. We'll be able to do stuff like that. But the key thing is when the ISM picks up, it drives the ETH Bitcoin cross. The ETH Bitcoin cross has been a beautiful pattern where this is a little bit out of date. It's pulled back a tad, but it's still the same. So this is a wedge pattern. Now, does it break to new all-time highs? I kind of think it might do, but even if it doesn't, it's big range, big sloppy range. It means that ETH is at the low end of its range, and it'll probably get back to the high end of its range, and it remains stable in its relationship versus Bitcoin. I think that is to come, and that's driven by the business cycle driving risk taking across assets. But when we come into that, the business cycle going up is the key trigger for altcoin season. And why is that? Again, what we need is more disposable income to invest. And what we all do is we want to go out the risk curves and make as much money as possible in the shortest period of time. That is the world we live in, because we are so we're so because of how high housing prices are, the cost of goods and food, how restaurants. I was in New York City. It was $330 on my own for dinner at a fancy-ish French restaurant, not like a 3-star Michelin. It's insane out there. So we have to make a lot of money. I get it. I get that things are a lot more expensive for many of us, or for all of us. And the only way of getting ahead is speculating. I get it. So I want to help you speculate intelligently. And altcoin season is there. That doesn't mean go way out the risk curve. But here's the total market cap of crypto, excluding the top 10. So this is really alts. It does this every time. It has this consolidation wedge pattern, breakout higher. We've just started breaking out. So have patience, hold on. And, it'll also get rid of many of our sins, the stupid shit you've got in your portfolio. I think it will help with that too.
Raoul Pal expects a major altcoin season as we move further into the banana zone in 2025, largely driven by central banks turning on their money printers to stimulate their economies. His everything code thesis suggests that asset prices are primarily influenced by central bank monetary policies and debt levels, rather than traditional factors like company fundamentals or economic growth. He argues that the high levels of global government debt will force central banks into quantitative easing to manage interest payments, creating a cycle where more QE is needed every 3 to 4 years as debt rolls over. This cycle leads to the debasement of fiat currencies, causing asset prices, including tech stocks and cryptocurrencies, to rise. In such an environment, cryptocurrencies are expected to outperform, with their growth potential helping to offset the effects of QE. Additionally, Powell predicts that during the crypto summer, Ethereum will likely outperform Bitcoin, with Solana accelerating its outperformance of both Bitcoin and Ethereum. He also believes that 3 or 4 cryptocurrencies will lead the altcoin season, with one new cryptocurrency emerging as a major player, similar to how Solana rose in the previous cycle. Based on his earlier analyses, Powell has identified Sway as the big new entrant for this cycle, expecting it to outperform Solana and possibly other top cryptocurrencies. Most importantly, Powell advises investors to remain calm and prepared for both price declines and increases. He views this cycle as a blow-off top cycle, akin to the 2016-2017 bull market, rather than a stunted one like the previous cycle.
2021 is not the roadmap. What happened in 2021, because of the violence of the downside in 2020, the upside was equally violent in the business cycle. And the ISM peaked in March of 2021. Right now, we're still below 50. There is no chance the business cycle peaks. And none of our indicators suggest anything that this crypto market is anywhere near overbought. So we are in this perfect position where we just keep following this roadmap. This is all I need. This is all anybody needs. You don't need any of the rest of the charts. You don't even need to log on to Twitter. You don't need to do anything, but just use this. Use this one chart of Bitcoin in its log regression channel and suggest it probably goes to 2 standard deviations overbought. What is that? Well, that's kind of north of 500,000. So maybe it goes to 1 standard deviation. That's about 300,000. That looks pretty reasonable to me. That's what every NASDAQ stock has done since 2012. So it's not like some special magic property of Bitcoin. No, it's Metcalfe's law. Amazon has done this. Microsoft has done this. Apple has done this. Tesla has done this. Meta has done this. It's all the same. So I'm not asking a lot here. I'm just saying it just continue to be adopted as a technology and everything continues to go. And in the end, what we're all waiting for is this little puppy, the banana zone. The banana zone has started and we barely started. And you freaking out, this stupid, oh my God, it's going to correct 20%. Look at Raoul's chart of liquidity. That's this, if you can see it. In 2017, that's this in 2021. In 2013, we didn't even get that. We got sideways. So if we get a bit of a correction here, does it make any difference? Or you're better off just going outside, touching grass, spending time with your family over Christmas, drinking a little too much Bollinger Rosé, learning how to toast your own snacks. Yeah, everything else is just. In the end, we're here for one thing and one thing only. I'm trying to help you understand that you can unlock your future with a banana. All you have to do is not this up.
Raoul Pal has a few straightforward rules for navigating the banana zone of the crypto market. His most important and popular rules include: avoid FOMO, steer clear of leverage, focus your main portfolio on top cryptocurrencies, avoid excessive diversification, self-custody your coins, and limit your Deegan investments to just 10% of your portfolio. According to Pal, following these guidelines and maintaining a long-term perspective, especially when the market becomes uncertain, will help investors fully capitalize on the opportunities within the cryptocurrency industry. Pal is optimistic about the future growth of the crypto market, predicting it will rise from its current value of just over $3 trillion to between $12 trillion and $25 trillion by next year. He foresees the market reaching $50 trillion to $100 trillion by 2030, presenting a once-in-a-lifetime opportunity for global investors. What do you think of Pal's prediction? We'd love to hear your thoughts, comments, and observations in the section below. For more Daily Dose Crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.